I'm Matt Bechard with NAREIT's REIT.com here at the Hay Adams in Washington, D.C. for the Washington Leadership Forum. Joining me for this CEO Spotlight is Ed Pettinella, President and CEO of Home Properties. Ed, thanks so much for joining us.
Thanks, Matt. Thank you for inviting me again.
D.C.'s been a difficult market for many apartment companies, including Home Properties. How confident are you on D.C. recovering in 2015 and beyond?
I think this year would be the first year, the second half of 15, where we start to see some improvement. It's been a difficult couple years, but I think now after the 5% cut in government and military, job growth is coming back. Supply is expected to peak in 2015. So I think with the absorption where it is, with more jobs coming downstream, continued low rates, low inflation, we expect better results in the second half of 15 and into 16.
And in the company's most recent earnings call, you said that the acquisition pipeline was more robust than expected. What's driving the deal activity, and where are you seeing the best opportunities?
It's somewhat unusual in 15 for us. We're seeing it in markets that we generally don't see a lot of acquisition opportunities. Northern Jersey, Boston, Chicago, and Philadelphia. We have been major buyers in the Mid-Atlantic region over the past few years, but I think our concentration, given the opportunities in these other four markets I mentioned, will focus on that. I think in the C world, of the 10 of us, as I mentioned earlier, we're the only ones that really get involved in the CB quality assets. I think the opportunities are more prevalent for us since we're the only player. And more importantly, when we want to really get aggressive, we can, because we upgrade these 30 or 40-year-old C quality properties. And in the modeling, we generally can be very competitive on ones that we want to buy. So for us, it's been a good 2014, and we expect with our pipeline right now to do the same in 15.
And lastly, the multifamily sector, and we've talked about this many times, has been riding some really strong fundamentals. Of course, that leads some people to want to try to predict the downside of that. What do you say to those people that are predicting that this run that multifamily has been on is going to come to an end?
The sector went up, I think, 39.7% last year. That's pretty darn good. I don't expect it to be at that level, but trying to be reasonable about it. Do I think the sector can produce in the mid-teens, which I think would be a very good return? As we all know, the historic return over any industry over decades is around 9%. So I think another good year. And why do I feel that way? This is going to be the first year since the Great Recession started that we actually have a normal recovery, one that's showing GDP possibly going over 3%. Unemployment still staying low, interest rates staying low, record low oil prices, low oil prices that we haven't seen since 06, 07. Supply, I think, is going to increase, but it's a controlled supply, and the fact that absorption is there to mop that up, I think this could be a very good year in 2015. I think will surprise people.
Great. Ed, thank you so much for joining us.
Thank you, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.